Welcome everybody. How is everybody doing? And can everybody hear me all right? Welcome everybody. How is everybody doing? And can everybody hear me all right? Yeah, there's probably a little echo on that last one, but I got the volume turned down on my computer now. So. All right, good stuff. Hey, welcome everybody to the live stream and the live teaching of this class. Really happy to have everybody here, and just some basic, I'm not going to call them rules, but letting you all know that this is a pretty long class. I've really put everything together in one slideshow in one place, and I'm going to go back. I'm going to be reviewing everything I've already talked about, just briefly touching over, and then getting into how do you actually combine all three of these strategies together to make one, usable and long-term strategy that you can use, and it's more reliable, more accurate, and just better overall for this style of trading. For anybody that doesn't know, I am, a Stacey Burke style trader, so all of these strategies are related to that style of trading. And at any time, if people have questions and stuff like that, I will be stopping periodically through, and I want this to be as interactive as possible, so that way everybody is getting their questions answered, everyone's following along, and we can just have a good, productive class. So please don't blow up the chat with questions and stuff, because I'm not going to be reading it. I'm just going to be going through the slides, and then at any point I ask, for questions, I will be stopping and answering questions. So starting off, I have my slide that I pretty much have been putting on every video, and this is just the slide that is explaining what three strategies am I looking at. I'm looking at these 3-day setups using signal days. I have the day counts right here, and then the 3-day cycle, and I've been reiterating this in all my videos, but these can be traded completely separately. They're three separate things, but related to this video and putting all of these things together, you can also trade them as one big strategy, and that's what I'm getting into today in this video. The steps and the process that I take on a daily basis, and you're going to see this is kind of how I have been orchestrating and putting together my thought process, because this is kind of how my brain works, and I know that a lot of other people out there like this level of organization. So the night prior, the day prior to the actual event, trading day, and everybody from the Discord knows, I do watch list and I do my charting the night prior, so that way when I come to the screen the day of, everything kind of makes sense. So the night prior, what day of the cycle are we in? These are things that I'm putting up on my chart. What is the opening range, the high low of that first Monday? Okay, so if we're on a Tuesday or Monday is just traded, I'm putting up that opening range, the high and low of that Monday on the chart. And then again, the initial balance, high, low. And then I'm measuring from the initial balance or the opening range high, and I'm measuring 3 levels of drop, and then I'm measuring from the low, so the opening range low or the initial balance low, and I'm measuring 3 levels of rise. And I'm going to show pictures of that, of course, throughout this. The day of, what am I looking at on the day of? I'm looking, is it a buy low or a sell high kind of day? Like a day 2, after we've had a false break at the low of the week, it's day 2. Am I looking to buy low that day? Yes, that's the type of day 2. We just had a false break at the low of the week. That would be appropriate for a day 2 in that direction. My areas of interest, high of week, low of week, high of day, low of day, high of session, low of session. Have we had a break in structure on the 15-minute chart? So making sure that I'm looking at a higher time frame and then going down to a lower time frame and not only staring at that 1 minute. And then looking at the time of day. Am I in my session? Are we in the gap time? Is it completely not my time of day-to-day trading? And, you know, making sure that I'm following those rules. And then moving on to moments before I actually take the trade. So this is me, you know, I've already done all of these things. I've made it that far, you know, and I'm looking at the screen. We're at one of these areas of interest, and I'm thinking, okay, you know, this could be it. We're almost at 9:30, or there's a new hour about to start. My thesis is in place, and what am I looking for? I'm identifying, so I'm thinking, what trade setup am I about to take? Is this a part of my plan? It is a part of my plan. Cool. So, you know, what risk am I taking on this trade? And I'm setting all those kind of things up. I'm watching the clock, and I'm waiting for the market to flip the book. And I'm going to talk about that, of course, later on as well. But this is basically when does the market stop rewarding one side, so the longs or the shorts, start trapping that side of the market, and then where do they shift in the other direction, completely keeping you know, either the longs or the shorts on the wrong side, where people are longing or shorting into an extreme, and then they are now stuck, and the market has basically told me, I'm not coming back, I'm shifting in the other direction. And then looking and initiating my entry criteria, which is, of course, all part of this flipping the book idea. And then after I'm in the trade, implementing my trade management criteria, which I will be showing you both entry and trade management criteria later on. Before I go any further, everybody that is in here, is everybody able to hear me okay? Is the video still good? I don't want to be getting through this slideshow and then, you know, everything looks like kind of crud, you know. So just one time, let me hear in the chat, can everybody hear me? All right, awesome, awesome, awesome. So, like I said, I'm going to be doing a review of everything first, and then I will get into, of course, putting everything together. I think it's important to quickly go back and just touch over some things. You know, it's probably been a while since maybe you've watched these videos, and I just want to hit them up. These are slides actually from previous slideshows and previous videos that I've done. So this was, I think, my most recent video, and of course, this was a recap on the 3-day cycle and also part of the deep dive in finding day one. So as we already know, finding day one in the 3-day cycle is a false break above or below the previous day's high or low at the high or low of the week. That is very important, the high and low of the week portion. And of course, that is where the market is traded up above a level, trapped, and then came back, confirming that there is a false breakout or a false break at the high of the week. Breaks below, above previous days. This is kind of what I just said. Previous day's high or low at the high or low of the week, and then closes back inside of previous day's range. A sub-variation of this is when it breaks through a previous day's level and closes above, below that level on the following day. So where, let's say on a Monday, they've broken Friday's low and then stayed below Friday's low and closed. And then on Tuesday, the market opens and then goes back above Friday's low and then closes on that Tuesday above Friday's low. That would be a day one on Monday, and then Tuesday would be day two. Day one can become a first green day or a first red day, which is a signal day for trading the following day. And then, of course, day three will sometimes become day one at the close of the day. That day becoming a false break, and then closing back inside, turning that day three into a day one. So, day two of the 3-day cycle. Again, more slides from previous slideshows, but still good to go back and hit it. Continuation in the direction of the false break. So if I get a false break at the low of the week, I would be looking on day two for a low of the day trade, low of the session trade, some kind of trending move. But basically trading in the direction of that false break at the low of the week, I would be looking for a buy low opportunity. And on the flip side of that, of course, there would be a sell high opportunity if there was a false break at the high of the week. These day twos can turn into a first green day, a first red day, inside days, or they can just turn into simply a trending day. Areas of interest on these days are high of day, low of day, high of session, low of session. And of course, always wanting to keep into account these opening range and initial balance. Was there a false break on opening range or initial balance? And also these areas can act as support and resistance. Another area of importance is these low bear and high bull support and resistance candles. And of course, we will be talking about those as well. Some of the trade setups that come out of day two are long and short squeezes, parabolic trend trades. Of course, on the flip side of that, capitulation style trend trades to the downside, high of day, low of day trades, high of session, low of session trades, and those low hanging fruit continuations, the trend trades essentially. So, oh no, go back. And then methods being, I want support resistance references. So low bear, high bull, previous day's high and low, high of day, low of day. I am measuring 3 levels of rise or fall in the day. So I've already kind of talked about opening range, initial balance, how I measure from the high of the week and the low of the week. But in this instance, once there is a break of structure, I am measuring from the low or the high of the day, 3 levels. So 75 pips, 150 pips, 225 pips, and so on. Finding these 3 levels of rise or fall for a potential strike zone, and then using support and resistance references as additional confluences. Then looking at day 3, last day of the cycle, can sometimes turn into day 1, like I already said, and it's either going to be a blow-off day, direction of the trend, or a reversal day. And then some of these trade setups include parabolic capitulation trend trades, reversals from the high of week, the low of the week. So, if you're on a day 3, this is where these trades can really become lucrative, where if you're at the high of the week, it is day 3, and day 3 often becomes a day 1. That's where your thesis can start to build, where you can start to think about maybe combining multiple things out of these 3 strategies together. We're at the high of the week. It's day 3 in the cycle. Could today become a false break? Where's the opening range and initial balance? And then knowing the things about opening range and initial balance, which we're about to go into review. Here's some examples of the 3-day cycle. I've taken these slides, of course, from previous slideshows. Failed breakout, high of the week, day 1. We have day 2, doesn't quite get down to that low of the week. Day 3 of the cycle, we are at the high of the week. Like I just said, could today become a false break? It really could, right? Because it's day 3 of the cycle. We're at the high of the week. Opening range and initial balance comes into play, and so forth. Depending on the timing window, looking for that larger trade setup and just kind of getting into that mindset. Here's another example. Day 1, false break, low of the week. Day 2, that trend continuation of the false break, right? So we had a false break at the low of the week. That means we're looking for a buy low opportunity. And then day 3, where we have previous day's level, and they have now come up above on this day here, and they've closed above it, but on the following day, they have traded below, making this day 3 turn into a day 1, and then our day 2 on that Tuesday. And then it continues on this current week. So where I'm at right now, I'm about to go into review on opening range and initial balance. Of course, that's supposed to say IB. So opening range and initial balance. Step 1, determining Monday's range. How wide is the range? So we have, let's see, this Monday right here, we have a more narrow range Monday compared to, some other, let's see, no, not that one either. We'll find one. I'll find an example. But some Mondays are going to be blow-off days and a very wide range, and just that alone can start to develop an idea. And then looking, does Tuesday extend the range of Monday, or does it stay within Monday's range? But first, step 2, determine the proper measurements. So this is what I was talking about, measuring from the low of the week and the high of the week, 3 levels. And these are just some of the references for 3 levels. Does Tuesday extend the range of Monday? Like I just said, an extension of the range could lead to false break. Oh, sorry about that. Go back. A large move. And then a large box can result in parabolic capitulation moves. And I will show you what I'm talking about with that as well. Step 4, the actual trades that I'm looking for. I'm looking for low of week, high of week reversals. And I think that my comments about day 3 from the previous slide might be you might start thinking about this in a different way. And I want you to already start thinking about combining these ideas, right? So like if I've noticed that day 3 is above initial balance and we're at the high of the week, so forth, I'm starting to think, could today become a false break? Can I take this to the other side of the range? Just something to think about. Here's an example again. This is the large box style that I was talking about. We have Monday, Tuesday initial balance, and we have initial balance high, 300 pips, so 3 levels of 100 from the high of the week down, working that low of the week. And then we have low bear candle, which this is the candle that was engulfed from the previous day. They've worked it, continued higher, and then traded back down into that low bear candle for the trade back through the high of the week. This is large ranging Monday. Tuesday expands the range. This is oil. 750 pips of rise. We had a similar incident on oil last week where they had gone up 750 pips. And then it did something kind of similar here where there was a break. They pulled back down, but in that instance, they stopped as well and just came back up. In this example, though, you can see there's 750 pips of rise. That gives us a 3 levels strike zone. We're at the high of the week on a Wednesday, break in structure on a 15-minute chart, and then the next day we have traded back under the initial balance high, giving us a potential thesis. This is also a first red day up here on this Thursday. This is day 1, day 2 of the cycle. Day 3 trades back down to the 50% of the initial balance. So that was initial balance and opening range. Now I'm going to quickly go into the signal days. And this is that flow chart that everybody's kind of already seen. But I just want to hit it again, and also so that people continue to see this, because I do think this is very useful. So, was there a signal day? No. Okay, that's fine. I'm not going to trade that pair. Was there a signal day? Yes. What kind? And then I'm identifying, was it a first red day, 3 days previous day's high? Was it a first green day, 3 days previous day's low? Or was it an inside day? And then I'm looking at this criteria over here for each of these signal days, and then simply going down to my entry criteria, which is down here. I will show you an example of every single one of these, and I'm also going to give you my entry criteria later on in this video. So, first red day. This is a first red day example. We have a pump day right here, and then we have a false break at the high of the week. That closes back down underneath of the open. That gives us a first red day. That is our signal day. So that tells us on Tuesday there could potentially be a trade. Now, in fashion of, trying to pair all these things together and get everybody in the right mindset, this is a day 1. We are false break at the high of the week. Day 1 has also turned into a first red day. Okay, so that's 2 confluences. We have the end of day consolidation. So I'm looking for a sell high opportunity on this Tuesday based off of it's day 1. We had a false break at the high of the week, meaning already on day 2 I want to look for a sell high opportunity. on top of that, we have a first red day. So this could be, a better pair to look at, depending on how things have set up. Consolidation, breakout, pullback. This is London session. Continuation. The market has just made a new lower low. This is what I was talking about with day 2 measurements. Measure from the low of the day up 3 levels of rise and find a strike zone. Okay. You can also use the previous session's high as a reference. There's other, areas of interest that you can use, but this is just part of the process of finding a good setup, a good trade. The market makes a lower low. That is your indication to measure 3 levels of rise to try and find a strike zone. Wait for the market to pull back and then find your trade. First green day example. High of the week. We have a dump day right here on this Monday. Tuesday closes it closes back up above this level. Actually, not quite, but still, first green day. Okay, and then we have this Wednesday. So if there's a first green day, we are looking for a buy low opportunity. We have the market trading down into the low of the day, right at London, and the continuation, or I'm sorry, the move back up through the high of the week. 3 days, previous day's high example. So, I've said it before, these 3 days of previous day's level, also referred to as 3 days breakouts, day 1, day 2, day 3 of breakouts, is a signal day. It is not part of the 3-day cycle. Okay. Day 1 of breakouts, 3 days previous day's high. Okay. That is the first day that previous day's high is hit. We have the second day right here and the third day right here. Now, a lot of people will trade this on this third day of previous day's high being hit, and that's totally acceptable. I like to use it in this manner as well if I notice the setup, but coming to the screen and noticing, okay, there's been 3 days of previous day high hit, and we have not hit the previous day's low. So we have a pump day. This is also closed now as a first green day, or I'm sorry, a first red day. So now we have 2 signal days bundled together. First red day, we have 3 days previous day's high hit. We do not have these previous day's low hit. We have our end of day consolidation. So this makes this a day 2 in the 3-day cycle. Also, we are at the high of the week. So this, day 1, day 2, breakout, and they are working the underside of that consolidation. Obviously, there was news, but you can still, the underlying thesis is still there. You can get the follow through trade. And then looking at Monday, we have our opening range high right here. And then where's Tuesday? So Tuesday's right here. This would have been initial balance high right here. So now we've had a false break on initial balance at the high of the week, and they've pulled back inside and shifted the market. Where are they going? They've already done a false break on opening range high. They did not stop. It continues. There's a good chance they're going to the other end of the range, and that is where, again, starting to compile all of these things together. Inside day example. We have an inside day here. This is a Wednesday, and they have worked down into the low consolidation and trend trade back up through the high of the week. Just using price action, they have not taken out the high or the low. And, where are they going? If they haven't taken money here and they've presented a trade setup to go to take this liquidity, that could be your magnet and the place where you're looking to, find the pattern and get into one of these trades. So I told you I would tell you my entry criteria in this video again, just as a reminder. My entry criteria. Prior to even thinking about taking a trade, all other criteria must be met. All that stuff that I just talked about in my review. I need a signal day, appropriate area of the chart, price action behaving accordingly, no news because I don't trade the news. Also, the news, depending on what kind it is, can, trap the market before the news. So that way, the whole day basically builds up to that news. And when you try to trade before the news, a lot of times you're going to get trapped in things. The market's not behaving accordingly. Before I keep going, though, I just want to stop real quick. Does anybody have any questions? Can everybody see the video okay? Does anybody have any questions about what I've talked about already in the review? If not, I'm going to keep going, but I just want to make sure that first red day, is this after 2 days of rise? 2 to 3 days of rise. All right, first red day. Criteria for a first red day. I'm looking for trap traders, draw end of day consolidation, look for high of week, so forth. Okay. So red day, first red day, this is first and foremost, I need a pump day. Okay. So the pump day is important to me because I need space. I want space for the market to be able to fall through. All right. Important as well. The first red day is after a large pump. It could be 2 days. It could be 3 days of pump. Okay, but it's just important to have a pump day and then on the following day have a day that closes below the open. Ideally after a false break at the high of the week, confirming a day one. That way, on this current day for first red day, you have a trade. And I hope that answers your question. What is the initial balance and how do you identify it? All right, initial balance. All right. Opening range. I'm going to do this one. Opening range. Monday is the high and low of Monday. The initial balance after Monday trades, okay, is the high and low combination of Monday and Tuesday. Monday and Tuesday, if Tuesday right here has extended Monday, this is the new initial balance high, and this would become initial balance low because it has not been taken out on that Tuesday. Three levels of rise or fall. Can they be drawn on any day for potential strike zone? All right, chalked. So your question, can there be 3 levels of rise or fall within the day? Hold on, I just went too far. All right, so I'm going to use this example on, nope, I'm going to go back to this one. Okay, so the measurements for rise or fall, okay? The first part of that criteria that I look for is, does the market make a new lower low? So we're in consolidation, right? The market has now traded down and made a lower low. We hit the previous day's low as well, okay? So now we have a new lower low, and when the market makes a lower low, it needs to make a lower high before continuing. That's why breakout traders always are getting trapped, because they are trading a breakout, the market pulls back a certain percentage or a certain distance, stops everybody out, and then continues in the direction it's supposed to go. And that is the whole idea behind this, is the market has just made a lower low and then measuring up 3 levels. So, you just multiply 25 by 3. You got 75. 50 times 3. 50, 50, and 50, right, is 150. Not to insult anybody's intelligence. It's just, sometimes I, just have to remind myself. So you got 50, 50, and 50, 75, 75, and 75, 225, 3 levels of 100. You've got 300, and so forth. And I understand that, you don't want to just draw a line and start measuring every single level every single pip value on the chart, because that becomes extremely confusing. But you know, your ADR, your average daily range, can help. So like if the pair only typically moves a certain amount on the day, you're not going to be looking for, you know, if it only moves, I'll just use an example, 100 pips on the day, you're not going to be drawing a 300 or 750 pip range, because that's ridiculous. You know, you have to be kind of smart with it. Let's see, Cam, quick question. After you have identified the initial balance, does opening range have a purpose anymore? Yes, Jason, the opening range. Okay, this is why I always leave these levels on the chart at all times. Okay, so I don't, let's see here. So like this example here, where I have drawn the opening range and initial balance, I will leave those levels projected across the screen throughout the entire week, because they will play a part in that entire week. And if you go back and you back test and you look at the relationship of opening range, so like leave Monday's levels on the screen, and then also project the initial balance low, initial balance high, leave those levels on the screen, okay? And just look at the relationship throughout all the different weeks on all the different pairs, and you're going to see how important those levels are. One day breach and it ends by the top at end of the day, all the way to the next day, just staying on top of the plan. Crimson, let's see, I'm going to read the question a second time and try and get it. When day 3 is breached and it ends of consolidating at top. When does day 1 start? All right, Crimson, I think I am understanding your question. So this example, we are at the high of the week. They've breached the high of the week and are coiling, and have now closed on Thursday back inside of, let's see here, back inside of Tuesday's range. So now the breakout from Wednesday has failed. Wednesday becomes day 1. Tuesday becomes day 2. And then Friday becomes day 3. I think that answers your question. For your example, which month is? For my example, what month is it? Let's see here. Ballard, I'm sorry, I can't remember. It was recent, though. I'll tell you that. It was recent. Perfect. Okay, perfect. Got it. Thanks. All right. Oh, Ballard. All right, cool. Figured it out. Hey, I'm going to move on. And if I didn't answer your questions in this iteration, please hold that question. I'm going to get to all of them at the end. I just want to at least, you know, get some of them as I go. Let's see here. All right, previous days, entry criteria. All right, having a trading plan. This is my trading plan. This is the one that I use on a daily basis. Now, of course, I have it written out here simply so that other people can see it, okay? That being said, I've kind of, over time, of course, I have this all in my brain and I remember it. Now, that doesn't mean I don't follow it. It just means that I don't have to, you know, look at it every single day and go, okay, yeah. Like, I have it so simple on here that I don't have to go back and review this every second of every day to remember what I'm doing. And that's kind of what I was shooting for with this trade plan. Was I don't want to constantly be like, you know, unsure or like trying to remember what to do as far as my trade plan goes. Now, of course, anybody who's been following Stacey Burke for any amount of time remembers that he put out a similar video to this, and I actually had used his and then modified it to make it my own. So, without a trading plan, you'll be acting based off of emotions such as fear, greed, anticipation, FOMO, fear of missing out, and with a plan, you have given yourself the exact steps you will take where to perform the best you can in real time. What is the trade management criteria. So of course, this is again part of the review. And I'm moving on now from, I've kind of tried to do everything in order as far as the days, the signals, opening range, initial balance. I hit trade management, or I'm sorry, my trading plan. Now I'm going into my trade management criteria. Actually, you know what? I don't think I went over this part yet. I'm going back. I'm going back here. I'm gonna have to backtrack because I think I asked questions and I skipped over the slide. So my trade entry criteria. Entry criteria being, I need a high or low to be formed. And looking at the charts, you'll see this on a daily level, obviously daily, whatever, weekly level, hourly highs, and so forth. Price has traded back into that high or low and some kind of 3-push variation. That could be a 3-burst stair step, usually ending in a 1, 2, 3, a triple top, triple bottom. That is the high and low getting worked. Must have some type of break of structure. That could be on a 15-minute, that could be on the 1-minute, or unless it is a low-hanging fruit continuation of existing move, first bounce style of trend trade. Chart pattern must be formed on the 1-minute chart. That is the chart that I am taking my entry on. I want to see a chart pattern formed on the 1-minute. It could be a part of a larger pattern. Stacey calls it a pattern within a pattern, and I think he got that from somebody. I can't remember who. But I want this pattern to be on the 1-minute. Like I said, it could be a part of the 15-minute, but entries are taken on the 1-minute. I want to see an M, a W, a triple top or triple bottom, a head and shoulders, and then I need a engulfing candle at certain times of the day. And of course, not explained on the next slide because this is an old slide, but that is my first entry, is a chart pattern engulfment. Chart pattern engulfment. The M's, W's, triple top, triple bottom, head and shoulders. Once I get an engulfment of that pattern, I will take my first entry. Pen hammer can be my second entry, and then I'm using the clock to confirm traders are trapped in the wrong direction, and I'm using the time to further enter the market and actually size in my position. I don't want to size in on this first engulfment, me personally, because I do not want to have that engulfment and it's a fake and they go back up and hit it one more time and I'm already fully sized in and I get stopped out at full stop. That is one of my biggest triggers, one of my biggest pet peeves, and so I have implemented this style to alleviate that. Okay. Peter Brandt, thank you. Crimson. Let's see. So I've already gone over the trading plan. Trade management criteria. So you've just saw my my actual trade entry criteria, right? Now I'm actually in the trade and I'm identifying my adding zones and add cutoff zones according to my trade plan and current trade setup. I add to my position. I will use sell stops and buy stops at the breaks of 1-minute candles using the time, and I will only add in 1 to 2 more times until I get time confirmation. That is the big thing. I don't want to be in full-sized 1, 2, depending on the trade setup, up to 4% on a trade, and then it flip around and come back and stop me out at full stop. That is, I want to avoid that at all costs. Capital management or capital preservation is number one. I would rather get stopped out at break even or, a couple dollars loss or, however much, very small, than full stop on full size. Depending on current size position, trade setup, and add stop zone, I will buy, sell the retest of the first time engulfment. So I don't think I have, no, I don't. I don't have examples of time engulfment. I'm going to, if later on I have time, I'll go into the chart and I'll get into this a little bit, but this is quite a large slideshow, so I'm going to have to get through it. After the second time engulfment, I will start moving stops off of the high or the low, reducing risk. Go back and watch my time engulfment video, and I'm going to be doing a lot more videos on this subject because it is a very important topic. Optional, I will use usually put a break even, all positions, price line, 25 pips from. So this is just me. I don't want the position to go 25 pips into profit and then flip around and come back and stop me out, right? So 25 pips is on size, with size, is substantial. I don't want the market to move 25 pips, flip around, and then come back and stop me out. So I will put I have a trade management calculator that I will put a 25 pips target, where once price hits that, it automatically puts all my positions to break even. How can all three of these strategies be? Okay, so now we're actually getting into putting all three things together, and I'm going to go into detail how I do that. And I've already kind of done that a little bit in the beginning, like I said, to try and get mindset shifting. All right. How can it still be simple and easy to use? What are the benefits of combining all three? I've kind of already hit all three of these things, but just something to think about. Combination, identification. I'm looking at the chart and layout, all three pieces of the puzzle for the current week. Signal days. I'm laying out the signal. This is basically a slide. I'm telling you what I'm laying out on the chart for every single week. This is how I identify the trades and how I go through and I find the best setup for the day and for the week. Look at the chart and lay out all three pieces of the puzzle for the current week. Lay out the signal days, if there are any, opening range and an initial balance. Monday, Tuesday has already traded. So obviously if it is Monday currently, you're not going to have your opening range initial balance yet. Day 3 of the cycle, if the cycle started in the following week, that is okay. We already know that, day 1 and 2 could have occurred Thursday, Friday, or day 1 could have been on Friday. And now you're on day 2 on that Monday, and that is what you're looking at on that Monday. That is okay. Just be aware of where you're at in the 3-day cycle. So this is kind of an example of what I'm talking about. I've got my day 1, day 2, day 3. I've got my opening range right here, the high of this candle on Monday. Notice how Tuesday does not come up and take out the high of Monday. So that now has become my opening range and my initial balance high. Tuesday trades down and takes out the low of Monday. So that gives us our initial balance low. But I do leave, like I said, my opening range low on the chart. And you're going to see these levels become important. Let's see here. So, some questions that you should ask yourself throughout the day and throughout the week. What day of the 3 cycle are we in? What are the attributes of that day? Is it a buy low, a sell high? Is it a trend day? Is it a reversal day? Is it 3 levels measured from low of day, the high day? Has there been that break in structure? Is that what I need to do for today? Is it that day of the cycle? Was there a signal day yesterday? What signal day was it? How would I normally trade that signal day? Was it an inside day? 3 days previous day's level? First red day or first green day? And then going back and reviewing, how would I trade this day? Now what you can do is I've already kind of gone over it, combine these two things. What day of the 3-day cycle are we in? Does it make sense for this day to be in combination with this, the 3-day cycle? If it's a first red day and it's a day 2 of the 3-day cycle, I am not looking for a long trade. Simple as that. And then I'm just looking for my areas of interest. Then you can add in this aspect, the opening range and initial balance. with this, so now let's say it's a day 2 of the 3-day cycle. Yesterday was a first red day, and we are just above the initial balance high. Or we've traded back down under the initial balance high and are jamming back up into that level. Okay? I'm looking for a high of day setup, but could this become a bigger scalable trade? Because I have the idea that based off of a opening range and an initial balance, as well as what has already happened in these two categories, could this take me back to the other end of the weekly range? How far away is that? Is it 300 pips? So these are some of the questions you need to ask. How wide is the range of Monday? Does Tuesday trade inside Monday, extend Monday? Was it a false break of the opening range? What is the measured distance from opening range initial balance low of the week to 3 levels of rise? This is what I was talking about earlier about, looking at the low of the week, that opening range or initial balance level, and then measuring up 3 levels for potential strike zones. And then also doing the opposite in the opposite direction. So 3 levels of drop. Could today become a false break of the opening range initial balance? Just like I said up here, could this day become a false break and then trade to 50% or other end of the range? And this is, I'm going to go back. I know this is going to probably lag the video, so just bear with me. Let's see here. There we go. Let this catch up for a second. So, we had the 750 pip move on oil, and then I had taken the 50% of the range, and it takes it down perfectly to the 50%. Could the trade become a false break? Yes, it could. Phenomenal. Where could it go? Well, we have the 50% level. Okay, that's potential target. Or we have our opening range high, which is also just so happens to be at that 50% level. And then we have our initial balance low. Okay. Let's get caught back up. Combination identification. Questions? Okay. So, again, I don't want to go too fast. So, does anybody have any questions about these questions so far and about what I'm talking about? I'll give it about 15 seconds. I will wait for any questions, and then I will answer them if there are any. If not, I will move on. Michael, yes. Opening range is Monday's high and low. Initial balance, highest high of Monday and Tuesday, and lowest low of Monday and Tuesday. Yes, Michael, that is correct. And then, of course, like I said, I will leave Monday's high and low projected across the screen as my opening range levels. And those are basically just the 2 levels I'm looking for. So like here where I have initial balance, I would project these levels across and just leave them for the week because they do become important. All right, any more questions going into... Let's see. All right, good stuff. So, now, I understand this is messy, okay? This is not, do you treat a false break and a failed breakout with volume trap the same? No, hey, yeah, this was a discussion. Thiago, sorry if I mispronounced your name, but yeah, I got it. I keep using false break and failed breakout. They're not the same thing. I completely understand that. What I'm looking at is there volume trapped up above? So like this, there's, I'm not looking for just a wick. If a wick just came up and touched it, that doesn't really count to me. I need to see this and then, trade it back below. And I hope that answers your question, Thiago. All right, so moving on. This is a continuation of this slide, okay? And this is me starting to combine everything together. Day one, first green day. On this Tuesday, we have a breakout that has failed at the low of the week. I'm going to try and get better at using proper terminology. I'm sorry with that. I keep saying false break. I understand this is a breakout that has failed. So we have a breakout that has failed at the low of the week. Tuesday was a false break of opening range low. Okay, so I've got my opening range low projected across for the week right here. Day two. Okay, so let's say that today is traded. I understand. This is in hindsight. What isn't in hindsight is I come to the computer on this Wednesday after a false break of opening range and also a day one of the 3-day cycle, and it is also a first green day. That is not hindsight. On this day right here, I come to the screen and I say, I am looking for a buy low opportunity. Where is buying low? I'm looking at the low of the day. I'm looking at the low of the session. Okay. Low of the day at the times of the day that I'm trading in the market. So if it is, New York session and I find a buying low opportunity, my entry criteria lines up, I'm going to enter that market. Again, everything I'm saying throughout this video is not financial advice. Everything I say is only for educational purposes. And, trading is risky. Most traders lose money, all that stuff. But that being said, I do look at these levels. Day three. Okay. Again, this is not hindsight. Day three can often become a day one. We've just had a break of opening range high and our initial balance high. And then what's not shown in this chart is the previous week's high as well. If day three can also become a day one, I want to see that this day could become a false break. Or it could become a trend day. I don't know. But I'm waiting for the day to prove my thesis correct. 3 levels of rise met. So measuring, this is my measurements over here, 525 pips, 3 levels of 175 pips. This line right here, almost perfectly at a previous day's level. 3 levels of rise. Could the opening range initial balance become a false break? Absolutely it could, especially once this becomes a false break and they are moving strongly through this trade. I would feel a lot better about holding it at this point because we still got a lot of room to go. So this day becomes a day one. This also becomes a first red day. On the following day, what am I looking for? Well, it's day two. That means I'm looking for a sell high. Yesterday was also a first red day. So that means I'm still looking for a sell high. And we just had a false break of opening range initial balance, and we haven't taken out the initial balance low. Again, I'm looking for a sell high. And then you can see that from opening range initial balance, the level of drop, we hit 750 pips almost to the tick. Yeah, the chart's messy, does not seem simple. So this is what more of like what the chart would actually look like for me on a daily or weekly basis. I just like to highlight things like this so I can kind of see where my levels are at, and then I always will have my levels like this. Now these lines are a little bit thicker than I'm used to just because I have these thicker for teaching purposes, so they're a little bit easier to see, but I prefer them to be like this, very light and very thin so that they do not clutter the charts. And then I leave my measurements a little bit thicker because they're off to the side and it doesn't really affect my view of price action. So why is this method simple and what are the benefits? Having all three pieces of the puzzle helps to find high quality trades based off of reoccurring market behavior, because as we know, the 3-day cycle is reoccurring market behavior. Signal days are reoccurring, and so forth. What has already happened in the charts? The chart is telling you a story. Anybody who's talked to me about, time of the day, time engulfments, I like to think of it as the market telling a story, and I need to listen. What is it telling me to do? I'm not forming an idea about what I want to happen. I want the chart to tell me what it wants to do. Having confidence in the setup and reoccurring behavior, risk reward becomes higher. Anybody who's been watching me in Discord, so I have my rules about max stop 25 pips, but anybody who's been watching me take trades in Discord knows that I'm a huge fan of trying to get in with a 3 to 4 pip stop loss and then trying to take 25, 30 pips out of the market, because that is going to, really, really get your risk reward up. Just having faith in the setup itself, and I'm not going to say knowing what's going to happen, but understanding that what should happen, and then appropriately trading the market based off of that. You're not guessing direction. It's not, well, the market looks like it could go here today. Oh, the volume is doing this, and blah 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 blah. That's nothing to do with this style of trading. This style of trading is solely based on, this is what has happened, this is what day it is in the 3-day cycle, this is what could happen based off of these ranges and the measurements, and based off of what day it is in the 3-day cycle and the signal day, this is how I trade that signal day. And that's all I'm looking for. It's not a direction. It's not, well, it was a first red day yesterday, but today looks like it could go long. No, that's not how these setups kind of work. Let's see here. Where was I just at? All right, so like I just said, based off of 3-day cycle, opening range, initial balance, signal days, it's either a buy low or sell high, and that is it. Trading from designated areas such as high of day, high of session, low of session, reduces your risks, meaning your risk to reward is increased exponentially. So what I had just said a few minutes ago, or a minute ago. And then after identifying all three categories, so your entry criteria, trade management criteria, and you have to just manage your emotions. And that is all you're looking at. So after you've identified, after you've identified these things, which I know that this is a lot of words on the screen, but it becomes repetitive and, just another day basically of looking at the chart. It becomes very easy to look at. After you have mastered that, this is all you have to work on. Your entries, how you manage the trade, and then not becoming emotional. That is why this system is simple. Here is an example. What is this, gold? So 3 days previous, so we have a day that's it's traded up above. So you could, call this potentially day one. This was a wick through, so it depends on how you look at it, I suppose. But day one, 3-day cycle. Day two, in the direction of the false break. We also have 3 days of previous day's high in the market. This is a day two until the day closes, right? So, some people might say, well, that's they traded above it and then came back in. Wouldn't that be day one? Sure. But we don't know that until right here. When the day closes and confirms that this could be a day one, that is when it changes. So up until that point, this is just a day two. What do you look for on a day two? On a day two, after a false break at the high of the week, you look for a sell high opportunity. You're looking for it at specific times of the day, which this happened all at, in that 9 o'clock hour, 9:15, 9:30, and so forth. And then, your signal day. 3 days previous day's high is hit. And then looking at opening range, how many levels of rise do we have? We have 3 levels of 75, almost perfectly. Opening range, initial balance. Could this be a false break of opening range initial balance? It could. Where's that going? Could it go to the 50%? Could it go to the other end of the range? In which case, it did. It went from opening range initial balance high all the way back down to opening range initial balance low. Another example. Day 1, 3-day cycle. Day 2, 3-day cycle. So you don't know this is a day 2 until it closes. So maybe there wasn't a trade setup this day for you. Who knows? But just understand that once this day closes a day 2, maybe now you could form an idea about Wednesday. You have your initial balance low. Okay? You have your initial balance high that has not been touched. What can happen on day 3? Could become a reversal day because it's day 3 that often turns into day 1. Of course, it could become a trend day. That's something that you have to work out as far as areas of interest, time of the day. But forming the idea, we have 3 levels of drop, minimum of 75 pips on this pair. This is US Canadian dollar. So day 3, we have a reversal. Okay. It doesn't quite go all the way to the opening range initial balance high, but that gives us a day 2 on this Thursday. Comes back down, perfectly hits initial balance low. What are you looking for on day 2s? After a false break at the low of the week, you are looking for a buy low opportunity back to the high of the day. And then the cycle repeats itself, day 3, and so forth. Now, of course, this is, I have it measured over here as well, 75 pips of rise to the high of the week from the low of the week. Again, before I move on any further, I'm going to ask, does anybody have any questions? I'm now kind of into the examples portion, and I don't want to go any further without, people just having no idea what's going on or if they're confused about anything. So does anybody have any questions? Anything I didn't answer in the last questions portion? Let's see. Break in structure, significant of. All right. So the break in structure, okay. Timing engulfments, okay. You mentioned day 3 turns into day 1. How does this differ from a reset day? All right. Let me. All right, these are all great questions, and I promise you I'm going to answer these. But for the purpose of combining all of these things together, these questions are not... I'm going to get through these slides first, these last 3 questions, so please take note of those, and I'm going to come back, and I promise you I will answer them. Balance from previous week relevant. Chester, Derek, initial balance from previous week relevant. I'm going to be completely honest with you. I have never looked at that, and I would not tell you yes or no without knowing that for a fact. So I've never actually, tried to back test that or look. But I do know that the weekly range is important and the previous week's range is important. So I would like to say yes, but it's not something that I personally look at. Day 3 turns into day 1. This point is a little bit confusing. Day 3 turns into day 1. All right. Okay, so let's see here. Okay, so G. You have a 3-day cycle, right? It consists of 3 days. I'm not trying to assault anybody's intelligence with that. I'm just pointing out that after the 3-day cycle ends, generally a new 3-day cycle begins. So if you're on the day that you believe, or the day that it is the 3rd day, which means there is I won't even call it a 50-50 chance, but there is a chance that today could become a false break at the high of the week or the low of the week, and it is day 3. Meaning that there is a probability that today will turn into day 1. Okay, so like down here, we are on day 3, which has a high probability of turning into a day 1. At the low of the week, meaning, which is part of the criteria for turning day 3 into a day 1. And we're at the end of the cycle. So it becomes like, okay, we're at the end of the cycle. We are at the low of the week. Could today turn into a false break or a breakout that fails? Okay? It's just part of forming an idea and forming the thesis. This day trades below and then closes back above. This turns into a day 1, and then of course the rest of the week continues. We have our day 2. Gee, does that make sense? Okay, let's see here. Okay, I'm almost to the end of the slideshow here. All right, so last example, day 1, and I think this might also answer part of the question for G. Okay, so day 1 of the 3-day cycle, one of the variations where we have a breakout of Friday's high, and they've closed above that. And until this Tuesday happens, we don't know what could happen, right? Day 1 of the 3-day cycle, this does not turn into a day 1 until Tuesday closes. Tuesday closes back down below this breakout level, meaning that the breakout from Monday has failed, making day 1, day 2, and then day 3, opening range, initial balance, reversal. This day 3, we have day 2, buy low opportunity, which also turns into day 1 at the close of the day, because we have a breakout that has now failed, and the cycle continues. Day 2, buy low opportunity, and so forth. How many pumps are usually required to create the space for a 3-day setup? What length between day 3 breakout? So day 3 will either reset or be a reversal. Ackman, yes, exactly. So like, you know what? Hold on, let's pull up the chart. Let's get this up there. Okay, let's see. Trading view only. There we go. Let's take a look at oil for this current week. All right. I think we all have probably seen what happened with oil this week. So I'm going to use this as an example. There are weeks where... Uh-oh, what's happened? Okay. Here we go. So you got your opening range high. That is from Monday. Then Tuesday gives you your initial balance high. All right. This is when I would measure up, and anybody who, like I said, is in Discord, you would have seen that I had posted this. We had 750 pips of rise from the low of the week. or from opening range low. So we just level this 750 pips from the low of the week. Now look what has happened. 1 day, 2 day, 3. Basically, this day turned into a reset, right? Because it traded back down, and then we went higher. All right, but we don't know that this is a reset until the day closes. So now that this day is closed, we can say that, you know, this might have been a reset, or this is a reset. And I, you know, been watching this and expecting this, or not expecting, but hoping for, or waiting for the charts to prove that this was going to become a false break at the high of the week, something like this. The first target for that would have been initial balance high, previous day's low, down in this area down here, thinking that maybe this was a break in structure. But overall, the thought that, you know, we could come all the way back down to something like this, you know, low of the week area. Let's see. Every market, if people trade it, can be used. Can 3-day cycle be applied in crypto? I don't trade crypto, and I don't really backtest it within crypto. But yes, this whole, if the market has price and it moves, yes, it can be used. I've even seen people using it with stocks and so forth. Any market futures playbook works the same. Day one, false breakout, which can happen. Yep. Markets trade over the weekend. Yep, just ignore the weekend. Okay. If day 3 does not turn into day 1, will we restart our day count? All right, so I'm going to talk about this real quick as well. If you look at a chart for longer than 30 seconds and you can't figure out what day you are in the 3-day cycle, it is simple as doing this. Going to a different pair. Because there are a bunch of them, right? And I'm not saying this to be smart or like rude or anything like that, but that's exactly what I do is, you know, if I'm looking at something and I'm like, wow, I have no idea what day we are in the 3-day cycle, that is perfectly fine. I'm not here to trade every single pair. You know, the only thing I want is to find something that I can see on the chart very clearly and make clear and concise trading decisions. Okay, so if I don't see what day we're in the 3-day cycle, I will just go to a different pair. If the day has, let's say we're in a strong trend, sometimes the cycles will continue to reset themselves because of a strong trending market. I will just wait for a break in structure of some kind for them to trap above a certain level, or maybe for a new week to start, because, you know, a lot of times the start of a new week resets everything in the market and something new can start to happen with that pair, and it's a waiting game. You're waiting for something to change in that trend for you to find a trade setup. Can you go over this week GBP, JPY for an example? GBP, JPY. Let's see what we got on here. All right, I'm going to hit this. I'm going to show GBP, JPY. And then I want to start talking about time engulfments, buffering. No, it better not start doing that. That would just be extremely rude. How's everyone else's video? Is it lagging? Do anything weird? Really hope not. Looks good. All right, there seems to be a little bit more delay. Just from, I don't know, maybe I'm using too much bandwidth. Who knows? But, hey, before I keep going, if you are in this stream right now, do me a huge favor. It really helps the YouTube algorithm, and it costs you nothing. Flick that mouse over to the like button real quick and hit that like button. You'd be doing me a huge favor. Now, let's get into GBP, JPY. And I'm just going to go through the whole thing and mark off the chart exactly how I would. Let's see here. We've got OR and IB. It's IB high as well because Tuesday does not take out the opening range high. Let's see. We've got our opening price down here of Monday. So this gives us our opening range. This is our opening range low. Okay, so opening range low, I would project that line all the way across, just like this. And I'm going to point some stuff out here in a second. IB low. Okay, so, part of the criteria that I had shown you or said was, does Tuesday extend from Monday? And you just have to start answering some questions. Does Tuesday extend Monday? Yes, it does. Okay. Well, how far are we from opening range high? $250. Where's 225? Okay. Where is 225? Okay, so we've got 3 levels of drop. So now we have 3 levels of drop on this pair. Right there. I'm just going to project that across 225. That is 3 levels of, was it 75? So 3 levels of 75. So that's just meeting, one of the checks in the box. Cool. Then what day are we in the 3-day cycle? This is Friday's high. We have traded above that right here, meaning that we have trapped volume at the high of the week. This is day 1 of the 3-day cycle. This becomes day 2 of the 3-day cycle on the close of Tuesday being below day 1. And then on day 3, after we get a W, right, at the low of the week, we have a W at the low of the week, engulfment, and then look how they trade back right into that candle. All right, peak, and then this is why I like to draw these end of day consolidations. This is exactly, a lot of people ask, what is that for, blah, blah, blah. For me, personally, I use it just because I like to see how has the day traded relative to my end of day consolidation. They've done a false break on that that end of day consolidation. They've ran the highs. They've pulled back now and continued higher. Okay? Same thing. Breakout, pull back, continued higher. The market might be trending. And then on top of that, okay, so this comes back to the questions and the whole mindset of, did we just have, or could we have, a false break, not only at the low of the week, but, could this be a false break of opening range? They pull back inside of the opening range and pull back and continue. What time is this? 7 o'clock. We're going to the New York session, and they've just told me or showed me like this might be a false break of opening range. Why would I try and short this? So, it's not only it's not only a method of getting into good trades, it's a method of staying out of poor quality ones. Yes, this maybe came back up and retested the high and then did something, continuation down. That's not the setup. And it's not perfect to me. So I'm not looking at this for a counter trend maneuver after it's shown me that OR could be a false break. It was the other day I was trading the US Canadian dollar and someone said something about looking for a short from the high of the day, and I said I think it's going long or something like that, and I started doing little fake paper trades because I already taken my trade for the day. And it did. It went long because of this reason. The opening range initial balance, they had pulled back inside of that range, and I didn't like what it was doing as far as, going back to the short side. Not toot my own horn, but I was right. Let's see here. Agreed. All good. Here from time engulfment. Hey, we're getting to that time engulfment very, very soon. All right, so day 1, day 2, that makes this. What is this? Yep. Okay, so here we go. So this makes this day 3. And that goes along with the idea of opening range could today become a false break. So day 3. All right. They've broken out on Tuesday and closed underneath of Monday's low. Now they've pulled back inside of opening range and also of Tuesday's low. Okay. So when that happens, when you have a breakout and then on the following day it confirms, you have, this becomes the new day 1. This then becomes the new day 2. And then you have a day 3 up top. Okay. And in this case, you can see where they did not necessarily do any kind of reversal on day 3. And that's okay, because think about things, I'm not going to say logically or whatever, but like they have done a false break of opening range on day 2 and gone up. They haven't taken out the high of the week yet, and they never did, and that's fine, but where are they going? Day 3 comes up and closes back up above, and then this is one of those ones where, let's see, the breakout of Thursday has failed, but we're not necessarily at the high of the week, so this is one that I would probably just, as far as the 3-day cycle goes, I would be questioning a little bit. Whoever asked that question, let's see. Why is this day 1? Monday. Monday is day 1 because there was a break of Friday's high, and then Tuesday traded lower and closed back inside, meaning that all of this up top turned into a breakout that has failed. Martine. Let's see here. Who had asked this question about? Yep, there we go. Okay, awesome. Now, let's get into time engulfment, and I'm just going to click on oil. Let's just do oil. Never fails to impress me on oil. It really doesn't matter. Let's just look at Friday. Okay. All right, so I think most of you had probably seen Stacey's picture where he had something like this drawn. Now, I don't know, but let's take a look at what time these candles were formed. 52, 40, 15. So I like to look for the beginning of a new hour, the opening time. So like there's 5. Okay. There's the 5 o'clock open. Where is 6? Obviously, so I'm going to look at New York session because that's what I trade. I understand that some of you probably trade London or other sessions, and that's okay. It works the same. It's still the same concept. The time is the time. And these time rotations, they still work the same. So here's the open of 6, okay? Which also happens to be the low of 6. 6, open. Now, look what they have done. They have all of this time up here, okay, where they haven't gone back down and taken out this little itty bitty bit of space. That is suspicious. You also have peak high. And let's just continue to look at the times and try to build a story about what is going on within this consolidation. Let's just say you have a short thesis, right? You have a short bias. But you're worried, what if they go back up? What if they go back up to the high of the day? Okay. Maybe they could. Let's wait. Let's find out. I know, hindsight, we see that doesn't happen. But let's just build the idea. 615. Okay. Or 630. And you're going to see, I haven't done this yet on oil, but I promise you're going to see that these open times become extremely relevant. 6:30, and I like to just go back either 1 to 2 hours before the session starts and start doing exactly what I'm doing right now. This is exactly what I would do to try and start to build a story and really grasp what the market's doing prior to the session. Okay, 6:30, 6:45, right there. And what I'm looking for is times to start getting mashed up. I like to see opening times pegged on top of one another because that is volume built using the time. They are building volume with time. All of these opening prices, I mean, this 15-minute candle could go up, open up here, but they don't. They keep opening in the same place, okay? 7 o'clock opens up. Where is 7? 7 o'clock, right there. All right. Amazing. They're containing volume. What candle is relevant? What am I doing with the time? Here we go. 7 opens, they trade down. Okay, so are these relevant? They've traded down through them and then traded back up. Okay, so these times, maybe they're not as important. It's important to note that they're built up on top of one another because, like I said, they're opening candles back to back to back on top of one another. It's kind of suspicious. That is built volume using 15-minute time rotations in the clock. So we have 7:15 open right there, again, within this consolidation. So now I'm building an idea for the 7 o'clock candle. What is going to happen with the 7 o'clock candle? Yep, I can see it now. I can see it without even, I guarantee. What is that? Yep. Okay. So 7:30, right there. Again, they're just building, building, and building. 7:30, now they've gone up and hit that. Look, 7:30 opens 1, 2, 3 into the 7:30 and to the 7, but they don't trade above it. Who is stuck and where? They come down. They break structure on the inside. First mouse triggered into the market. Okay. Boom. So not related to time, but first mouse triggered into the market. They have now worked these opening times in 3 pushes. This is a hourly candle open. They've broken structure to the downside. Let's see. Let's continue our time idea. 7:30, 7:45 right there. Opens up and runs price higher. One, 2, third dump. 8 o'clock opens on this line drive. I call it a line drive candle. Right there. That is the 8 o'clock open. Look what they just did. All of this time, all right, we've got 6:30, so below 6:30, what was this over here? 6 o'clock, everything above 6. If you went long anywhere in here, you are underwater and you might just either give up or you, you know, I hope that you're not like holding on to a loser, but you're underwater in one candle. This one 8 o'clock candle comes down and puts everybody who bought in this area underwater. Okay? The idea that I have using this method. So let's say I saw this break in structure. They come up, down, down, and I said that was an M of some kind on 1 minute chart. Okay, I think that's valid. We had a break in structure. We have an M that is kind of formed. Let's say I just want to take my first entry. Of course, this is all in hindsight and what if statements, but use the idea that, okay, they've just engulfed a chart pattern. They've worked an hourly open. They've tested it, and we've started going back down. Okay, so maybe this is the lower low and the lower high. If people were buying up here into these three pushes, they are stuck. The market isn't going to go back up and let them out of their positions. My stop should be, I'll say should be, safe in this area. Okay, and sometimes I'll bring it down a little bit more just to even reduce risk a little bit more. If I've added in through here, good stuff. In one candle, they have taken all of these people down. They should not go back up. Okay? Definitely shouldn't go back up above the 6 o'clock, the 7:15. They've engulfed multiple times now. I'm putting my stops to break even. Because if I'm wrong, they're going to shift back up and hit my stops. If I'm right, it's just going to keep going. And that's all there is to it. Because they've engulfed multiple times, I feel more safe. I feel like their work has been done. They have multiple hours now of built up consolidation, breaking structure. They've pumped it back up. Miniature chart pattern, triple top into the 7 o'clock open, and a micro M. They should not go back up at this point. If I've added in more on this candle, how do I manage that? Okay. Probably with less size for one because of the size of that candle. But I'm never going to use larger than a 25 pip stop. Okay. And if I believe that they're not going to go back up and my break even is safe, if my break even is safe, then I'm putting my stops at my break even point. I'm not accepting any more risk than that. Okay. They can go back up and work this 7:15. They could even go back up and work at the 8 o'clock, maybe. But, you know, in this situation, in this scenario, it's highly unlikely. Everything's about probability. Okay, so if I added in a second time, I've accepted more risk, which means I need to reduce risk, which means I'll go to break even. And then just manage the position from there. Obviously, this fell 88 pips in the first leg. I didn't take this trade. I was watching something else. Does anybody have any questions, or is anybody wondering anything so far about time engulfment before I get into the next example? Much more clear. All right, Can you do an example with London? Yes, let me find one. Probably a GBP pair. What time is that? Well, there we go. First pair I clicked on. All right, so GBP, Australian dollar. Break, low of the week, day 1 of the 3-day cycle. Which means we've got a day 2 on Thursday. We're looking for a buy low opportunity. We have our low of the day as a reference. There we go. And I will go down to, let's get this so it doesn't mess with me. I will go down to a, yeah, right. All right. Yeah, this is definitely going to lag the videos, so just, I'll give it a second to buffer, and I will get into this. Let's see here. How do you determine the take profit? Okay. So, let's see. London starts 2 a.m. New York Eastern Standard Time. And I already know that I'm probably going to mess up and say at some point, like, I don't know. Whatever. So just start around, the 1 o'clock candle. Start building the story. I am looking for a buy low opportunity from the low of the session or the low of the day. So what's happened? We've got our low of the day that was created over here at 11 p.m. New York Eastern Standard Time. We have a market that has gone up. This is low, lower high, lower low. We have a higher high. Okay, so that is, somebody was asking about a break in structure. What is a break in structure? I just use market structure. That's all it is. I have a low. I have a higher low. I'm sorry, a lower high. And then I get a lower low. And then I get a higher high. I am waiting for the dump and pump scenario. This is the first mouse right here. Manipulation of the market. They've just trapped the first mouse on the first higher high. They're going to go down and put in a low. So, that being said, that was your break in structure. Let's look at the times. 1:45. This is the hour prior still, so we'll just start there. Where's 1 o'clock open up? 0, 1. One o'clock right there. Okay. And this also supports what I said. This is the break in structure, and they have trapped everybody up here. Okay, so if you traded this and you were in early, you became a part of the liquidity pool. They flip the book right here, and then they retest the 1 a.m. before continuing down. Okay, so let's start from here. What time is this? 1:30. Does 1:30 open as a line drive? Yes, it does. Up into the high, into that break in structure. So, where does 2 o'clock open up? 2 o'clock begins the shift back down. Yep. Okay. Right there. 2 o'clock's where they flip the book. Underneath, and they start, look, they drop it down underneath and retest it. There we go. They drop it back down underneath and retest it, and then now everybody up here is stuck. So this becomes trapped volume intraday, and I'm looking, you're looking for that dump and pump because they just broke structure on a larger time frame, and here they come. So 130, 250, that's 215, where's 230? 230 is right there. Yep, so they're continuing to bring the market down. No big deal. Pays the bills. Look how important these times are. Okay, 230. 245. This is not coincidence where they're doing these pullbacks either. They're doing these pullbacks. Everything's very precise. 245. Three o'clock opens up down low. We're now at our area of interest. We're at the low of the day. We just 3. That is the 3 o'clock. So now we're into the middle hour. Dump it down in a 3 push pattern. 1, 2, 3. Hit the 3 o'clock. Short squeeze behavior. Vertical. And they pull back. And look what time they come down perfectly, almost to the tick and touch. All right. So, like if you were to see this and you said, okay, we're going back up into the market, and just look how tight your stops can be. All right. Let's say I entered on this candle and I said, okay, I'll just put my stop at the low. They just ripped it back up, and this is a 3 push pattern. They shouldn't come back down. I've got a 9 pip stop, 10 pip. Where do I target? Let's just say I just targeted here. Okay. Minimum, you got more than a 3-to-1. Okay. You're supposed to be targeting, if it's a low of day trade, you're supposed to be targeting the high of the day. Okay. Now let's say, if you got patience, maybe you've already taken some off the table, but you've left a runner. This is where you can really get into profit, because you're looking, these are the types of things that you're looking for. Now, of course, this is London, and you don't get continuation into New York, so, is what it is. Let's say, I don't know, you just want to come up here, you get your 50 pips, and you're done. You still got a 5-to-1 opportunity. But time-wise, short squeeze behavior. They squeeze. Look who's stuck now. Anybody who bought in this 3 push pattern, that's who's stuck. Anybody who bought this 3 a.m. candle at the low of the day, trapped. Okay, so they're not going to come back down here, in theory. That's the thought process. And when they pull back 1, 2, a 3rd push down, they pin down into the 3 o'clock. I mean, that's just further confirmation, okay? Where is 330? And I want you to recognize and look at what times everything is manipulated, everything is timed, everything is measured. Look what these times engulf. They're coming down, hit it again, and then they stay on top of it. Okay, this is how you start to identify a trend. Is just watching the clock and seeing where things become support and the behavior of the market. Big candles, spiking candles, inducing candles. Everybody needs to go short. And it just stops. Comes back up. Dumps it back down. I guarantee you the speed of these candles was pretty ferocious. I guarantee you when this candle pulled back, it was very fast. And then I hit it again. Okay. Had a great trade on Friday with news. If you want an example. How do you determine the take profit? Mika, take profits. there's a few different ways, okay? Now, I've mentioned it a little bit about, you know, if it's an opening range, initial balance trade, day 3, high of the week, I want to see it go back to either the 50% or the other end completely of the range. High of day, low of day trades, I want to see them go again, either to the 50% of the day's range, or back to the other extreme of the day. High of day, low of day, I want it to go back to high or low of the day. If it's a session scalp, I'm just looking to get my 25 to 50 pips, and it could go back to the other end of the session and I'd be happy, whatever. Time engulfment. I'm telling you, once you, let's see here. And like even in looking at a 15-minute chart, you can look and see, start to see where, let's just project this line across. Okay. I think this is, someone would call this a cup and handle, right? That's the open of the 1 o'clock. 1, 2, sideways, 3, and then they rip it. They've engulfed the 1 o'clock hour. There's your little handle, right? And then the continuation. I just pulled this out of my hat. Where are we at in the week? I have no idea. All right, it's just, that is the idea. Who is stuck? Everybody going short into the low of the day, into this previous day's level. What time got engulfed? That hourly open. They've engulfed the 15, 30, right? All these opening times just got ripped. And then induce shorts, induce shorts, induce shorts with a pin hammer, continue the market. How do you know it has the potential to be a measured move? Okay, so how do I know it has the potential to be a measured move? How do I... So it's based off of the setup, Jay. So like, what day is it in the week? Does it make sense? First and foremost, does it make sense that this could be a measured move? Is it that type of setup? If it's a session scalp, and you know it's a session scalp, I'm not looking for a measured move. I'm just looking for my pips and getting out, right? But if it's a day 3, it's the high of the week, we're on top of opening range, initial balance, and looking, you know, it's an opportunity where it could become a false break. And the other end of the range is 300 pips away. You know, I start to pull out my little tool. Nope, not that one. Hold on. So like you have consolidation and stuff like that. And you can pull out your little tool and start high and low. Where do they break out of? This is whole consolidation right here. They break out, pull back, and continue. I mean, everything in the market is measured. So, you know, if you want to use this throughout your trading, you just measure the consolidation. And there's been a lot of times where I'm not really sure where to take profits or something like that. And I just, you know, I'll take a measurement of a consolidation and say, okay, well, I don't know. Let's see. They broke out of here. Where could they go? I don't know. They didn't make it. Obviously, that didn't work out. Okay. But they hit one full expansion of something. There was something that they hit one full expansion of. Nope, they didn't even hit it there. 50%. Regardless. All right. If it's a strong move and it's moving, it's behaving accordingly, and the setup makes sense, then that's when I would use the measured move. High bulls, low bears. All right. So, and this is going to come into, I'm going to talk about the high bull and low bear referencing initial balance and opening range. Okay, so we've got Tuesday down here, just like that. That gives us our initial balance. Good stuff. All right. We have a W at the low of the week, and we have the last bear candle. Let's see here. That was engulfed right about there. Now, this is not a precise thing. All right. I think that's important to note. These low bear, high bull candles, they can go below them, okay? But they still become important. And you can kind of see that here. But the thing is, look what has happened on the following or the previous day. I got it. This is day 1, day 2. So we're on day 3. The market's coming down. We have market structure. Lower low, lower high, lower low, higher high, and then what do you look for after the higher high? You're looking for the dump and pump, as Stacey would call it. Okay. Yep. You got your dump and pump. You have a higher high. I'm looking for low of day. This is day 3. Day 3 often becomes day 1. Where are my areas of interest? I've got my low bear candle. I've got previous days, which I had on one of the slides in one of my previous slideshows. Excuse me. My areas of interest or my support zones, right? My low bear candle. Initial balance becomes a support. Previous days levels become support, right? So all 3 of these things acted together in this trade. You got your low of the day. Look at this. Low of day is support. The whole day becomes a manipulation. All day, look at this. Oh, all that support. Retail says, oh, that's support. Oh, that's resistance. You've got people buying and selling all through this range. Manipulation. They hit the other side of it. So you had a larger break in structure over here, but you also have a lower low. You have a lower low put in right here, and then a higher high right here, and then the dump and the pump. So like even if you didn't notice this, the higher high and the dump, you're at the low of the day on day 3, blah, blah, blah. You've got a break in structure on the inside right here, and then you can look for the dump and pump from there, which could look like, something like that, and the pump. That tool for measuring is it in TradingView. Amica, that is the Fibonacci tool, okay? And then I've modified the settings to look just like this, and I will leave them up on the screen for a moment. It's just 100% expansions of a range. It's kind of like if you look at any trading books and certain patterns, there's measurements that are used for them, and they're called measured moves. This is a kind of a way of doing that. So fractal, breaks around the 1 minute. Everything in the markets is fractal, Darius. So if you have a break in structure on the 15-minute chart, right, there's going to be a bunch of break in structures all through here. And that's why people are so weary about the 1 minute, is because, it gives a lot of false signals, blah, blah, blah. But if you know exactly what you're looking for, right, you're on the one. Let's go back down. Let's go back down to the 1 minute. You know exactly what you're looking for. You're at the low of the day. You're coming into your timing window. And you have this kind of behavior. And you can see on the 15-minute, hold on. You just had a break in structure. Where's that? Right here. You got a break in structure. And they're pulling back, coming into a new hour. Okay? A lot of people would be like, trying to short this into the low of the day. Oh, this is, I don't know. That's not it though. You know, this is a break in structure within the day, and they are pulling back. This is an accumulation pattern. This is the manipulation, and they're going to shift eventually in the correct direction, right? So yes, break in structures are fractal. How does one determine which break-in structure is valid? Time of day and the trading setup. That's what this whole entire video has been about, and this whole entire live stream has been about, is, you know, just going back to what day are you in the 3-day cycle? Where are you with opening range and initial balance? And was there a signal day? Is today a buy low or a sell high opportunity? And that's it. You look for everything else just becomes extra, right? All the other stuff is confirmation of the setup. This is a day 3. Could today become a reversal? Well, we just had a break in structure on the 15-minute. They're dumping down. We have another break in structure on the 15-minute. Okay, if I was long here, maybe I have more confidence now that I could hold this, or I'm taking profits. I just saw this break in structure and they're pulling back. All right, let's wait. I'll re-enter the market once things get, you know, I can reposition. Are the low bears and high bulls formed at specific time of the session? Richard, I've noticed that. So along with my timing idea, right? Remember I said that those 1 hour opens seem to be, they're a lot more important, okay? So you've got a 6 o'clock open time right here. These two candles, this is part of the W, right? And it gets engulfed right here. The candle that just got engulfed, the shift candle, engulfed the 7 o'clock candle. So I prefer if my low bear is the opening price of a hourly candle. And that is from my own back testing, I suppose, my own looking at the market and seeing how things work. That's just what I have noticed. I've noticed that those candles provide more support and they seem to be more relevant than others. Index currently on day 2. Actually, I'm not even going to get into that stuff. That's not. All right. We have been in this video now for almost going on 2 hours. I've kind of taught and accomplished everything that I've wanted to. Before I close out, does anybody have any more questions regarding how all 3 of these strategies or tools, this way of trading, can be used together as one to improve trading, improve your trading, and make you better? Also, I'd like to say, if you are new here to the stream or to my channel, please do me a favor, hit that like button, subscribe to the channel so you can continue to see this kind of content. I do live streams now. Please join the Discord. We have a great community over there, as well as I do, you know, long form content, videos, a lot of instructional things on this channel, and I will be continuing to add on and continue, you know, this style of trading. Strategies. All right. How do you trade inside day? Not question, but thank you so much. All right, I'm going to get to Michael's question first. If you could prioritize the strategies, what order would they go in? Or is it not a good way to think about it? So, you don't... Kind of. All right. It's a combined effort, but because they can be all traded separately, you know, you can you can trade, like I just said, you can trade all of them separately, so you don't have to prioritize all of them. But they're all their own entity, and they all can go into one another to give you better idea of what's actually going on. I would say to look at, if I had to prioritize, I would say look at the signal days and the 3-day cycle first, and then, you know, understanding those attributes, look at opening range, initial balance, because that is an extremely important part of the week. Easier to back test, forward test these concepts. Mr. B, easier to back test or forward test these concepts? So I don't necessarily know how to answer that, other than tell you that the way I did it was, my back testing was simply studying. I would go back through the charts as far back as TradingView would let me, and I would mark up the charts over and over and over again on all of the different pairs, and I printed all of them out, and I, you know, put them all in a binder, and then everywhere I would go, whether it was I was going to work, I was going out, you know, with family or whatever, any spare time that I would have, or if I was just home, I would pull out that binder and I'd be able to look and be able to study. I want to know what right looks like at all times, and that was my form of back testing. And then I would forward test by, you know, actually trading in the market using demo until I was profitable for a certain amount of time on demo, and then once I achieved that, going with live funds. Does inside day still count? All right, so there I've seen a few things, all right, and I don't want to say this with certainty, but I'm pretty sure that Stacey has said that if you have day one and then day two is an inside day, you would move you would basically say day one, day two, day three, like day two, you would shift it, whatever. To be honest, that always kind of confused me a little bit. And you all have to understand that although I am trying to reteach or give you my interpretation of his work, that's exactly what it is. It's my interpretation. And the way that I have always done it is I have just said day one, day two, day three. If day one was the false break and the next day is the inside day, that is still day two to me. And then I just go to day three on the following day. I understand if that's not how he teaches it. Somebody please feel free to correct me. But that is just how I have always looked at it. Thank you. Day three becomes day two. All right, everybody. This stream I think this has been a very productive, interactive stream. I want to thank you all so much for showing up and for listening along and following along. I hope to do lots more of streams like this in the future. I am going to cut it here, and then if you want to continue to follow along, like I said, if you're not in Discord already, please, the link is in the description of this video. I'm very active in there and answering questions and helping in any way that I can. And I hope that you all have a wonderful day, and I will see you all in the next one.